Hey guys, just wanted to do a quick follow-up. So I've had another recent client talk about a book they read. The book kept talking about tax-deferred accounts compared to tax-free accounts. So traditional IRA versus Roth IRA. And the general concept that everybody seems to talk about when they're talking about that, especially if they're promoting the tax-free Roth direction, is they talk about, would you rather have your taxes paid on the seed that you're planting or on the harvest when it's all grown and done, right? And they make it sound like if you pay taxes on the seed, you're going to save yourself money in comparison to having to pay taxes on the full harvest. Well, it's a terrible argument, and I want to show you why, so that you can hopefully explain this to other people that won't get tricked into thinking one direction is better than the other. Okay? And I'm not promoting tax, the traditional standard direction. I'm not promoting the Roth direction as one being better than the other. What it comes down to is, when are you going to pay the taxes? What tax bracket will you be in at that time, right? Upfront or later, which time frame will have lower tax bracket that you're in. Okay, so here let's do a quick breakdown. Here is an example of a traditional IRA scenario. So we'll just say it's 401k, just due to the amount. So let's say somebody put $20,000, and I'm taking these numbers directly from the book. Okay, so in the book they said if somebody invested $20,000 and they got a 30 year time frame that they invested that money in, over that time frame they averaged 8% return. I have that plugged in, right? In this scenario, if they invested the 20,000 in a tax deductible account, so a 401k as an example, and they then were able to invest all 20,000 because they didn't have to take taxes out. And let's say they were in a 30% tax bracket when they put the money in, and they were in a 30% tax bracket when they took the money out. So in this scenario, they invested the 20,000, got an 8% rate of return, and after 30 years, they would have 201,253 bucks. But when they take the money out, they're going to have to pay taxes, right? So if they're still at a 30% tax bracket at the time that they take taxes out, then taking out 30% tax from the 201,000 means that they would have $140,887 that they have available after taxes in that example. So the conversation is, look at all the taxes that they have to pay. Why would you do this, right? Well, let's go the other direction. Let's say they pay taxes up front and then they let the money grow. Well, in this example, if they took out 30% taxes from the 20,000 that they were going to put in, they would be putting in 14,000 instead of the 20,000. They got invested for 30 years at the same 8% rate of return. Magically, what do you know that grows to? It grows to the same $140,877.20 that the after-tax amount would have been in the traditional IRA. So you need to understand there is no difference in your final asset value. If you invest the same amount of money, you get the same return, and you're in the same tax bracket when you're putting the money in compared to when you're taking the money out. I know everybody thinks that there's going to be some difference. There's not. It's the exact same amount. Okay? If you put the money in and you're in a 30% tax bracket and you deduct that, and then when you're retired, you're in a 15% effective tax rate, then guess what? You just saved 15% taxes. Okay? Or if you put the money in a Roth when you're in a 12% tax bracket, and when you retire, you're in a 20% tax bracket, then guess what? You saved money because you put the money in a Roth and didn't have to take it out at a higher tax bracket. What you need to understand for yourself is Am I going to be paying more money now in taxes because I'm at a very high income? And when I take it out, I'm not going to need that much income, so I'm going to be at a lower bracket. Or right now, am I in a fairly low income, so I should put money in Roth and expect that when I take the money out down the road, I'm hopefully going to be taking out a higher income, and because I'll be retired and living off of better scenarios than when I'm 25 and I'm making not that much money yet, right? That's the determination you need to make. This whole garbage argument about paying taxes on the seed or the harvest doesn't matter if you're in the same tax bracket, like they always talk about in these examples. So just want to make sure these things are irritating me. And I hate when education does this. Uh, they're stupid. Understand your own situation and figure out which one's best for you. Don't worry about paying taxes later if you're going to be paying taxes on less income because you're not working full-time jobs. Okay? Hopefully that helps. Appreciate it.